Hi, this is the Hot Coffee Investor. Figured I'd do an update video. It is Sunday, December 10th, 2023, and it's been a while since I've made an update video, so I figured I'd do it. And my hair looks awful. All right, so let's get right into it. I did get a little greedy this year. It's one of the reasons I haven't done a video in a while. Cost me a lot of money. I actually was up about 126% over a 3 month period. Got the account up to 146,000 and change from where I made the video a long time ago. And then I got extra greedy. Instead of staying with the same size that I had been trading, I went from investing to trading for a little while because I saw a lot of opportunities. Um, and didn't work out. Brought the account down quite rapidly over I want to say, probably a 4 month period from that 146,000 and change mark down to about 16.5. Not my proudest moment, but it is what it is, and I can't blame anyone but myself. However, I have bounced back from that, and I should be back, I'd say, by January or February to about 25-30 without adding any funds to the account. I've taken a slower, longer approach to get back to where I need to so that I can ramp up later and get back to reinvesting. I did get caught, I think like a month or two ago. There was a CBOE issue, and then I got stopped out in the markets in a 9-second interval where impossible orders were placed that shouldn't have ever existed. And I got stopped out of everything, and then my brokerage panic sold all of my bonds too at an impossible level. I don't know how that happened, but so I got absolutely crushed. But it is what it is. However, we are up. In November, I was up 12%. And then this month, I think I'm up 4% already. So I'm getting there. I think I'm at like 19 and change from, I think it was 16.5 or 16.2 or something like that. And that is with paying myself out of the account, because it's what I do for a living. Is I trade for a living, and then I invest the proceeds that I don't need to grow the account more. So, it would be over 20 to 21, but I had to pay myself to pay bills, and that's just the way it is. That's what I do. That's what I've always done. As I said last time I made a video, fixed income's looking very good. Unfortunately, the fixed income I had procured, which was at the time probably about 25 to 30% of my portfolio, as the losses started piling up, became 30%, then 40%, then 60% of the portfolio, and then they got fire sold off by the brokerage, which shouldn't have never have happened, but it is what it is. So what are we doing now? Well, my Roth is still doing just fine. That's actually up quite decently this year so far. I think it's up 26%. And that obviously isn't very actively traded. I just sell covered calls in it, and then move money around where I see a need to be. And so right now, a big position in that account is BMY, because it came so far down this year with, decently bad news, but nothing catastrophic. And I picture it going back up. So I've been selling covered calls in that every week, which has been building and building and building. And the price has been growing and growing and growing. So that's been great. And then in my brokerage, I've been doing, I hate to say it, doing NVIDIA calls, because it's just been moving so much up and down, up and down. I've been stuck in those since last Wednesday, not this Wednesday, last Wednesday. But I think Monday or Tuesday I should be able to finally get out, assuming the market doesn't recorrect again. And I should make a couple thousand on that. Other than that, I think there's quite a few opportunities that showed themselves in October and November, but I think those opportunities are now gone, and we have to see what kind of happens yeah, with the way the market's been going. I just wanted to do an update video, tell you that things were going well, and they were ironically going well when I wasn't posting, but now they're not. But I am transparent with everything that happens because, it's good always to learn. I did pile into NVIDIA, not on their most recent earnings, but their last earnings when they actually did what I didn't think they would do. I didn't think that they were actually going to hit those numbers because the people who produce their stuff for them, they weren't showing increased order numbers or anything, but yet still they hit their numbers. And then when they hit their numbers and exceeded them, I jumped in, and that was a huge mistake, and that's what cost me about $46,000. Um, so, that was my mistake. But I did tell myself if they did hit their numbers and surpass them and show guidance for the following quarter, then I would get into the position, even though I was very late to the position. I did have NVIDIA a long time ago, and it worked out well, but I got out of that way before it dropped down to that crazy low level. Like 2 years ago, I got out of that position. What else is there? I still think fixed income is looking very good. I think if you have the cash to invest in fixed income for long-term gains, you should definitely be in that right now because the interest rates are still perfectly fine, and you really want to be in that before they start dropping, because when they start dropping, they're really going to drop, and you only have these short periods of time where fixed income is actually really good. You don't have prolonged time to do it. Because once the interest rates start going down, you really, really are only going to have that chance for capital appreciation, if that's what you're looking for, or to lock in those higher rates for longer. Just make sure you get non-callable CDs or bonds, because, I know people who have been getting their CDs called, that, bought non-callable CDs because interest rates are fluctuating so violently right now that these CDs, these banks just don't want to have them on the books. They'd rather pay less, obviously. I mean, who wouldn't? And they have the option to call, so why wouldn't they? They can always just sell CDs cheaper, which is what they're doing. So just be careful with that. None of this is financial advice. This is just what I am doing, or what I would be doing if I still had the cash available right now. I actually had a lot of non-callable CDs that got sold without my permission by my brokerage. I'm not going to name the brokerage because, them and I are in talks about it, and I don't want to get on the bad side. But that's what I would be doing if I had the cash still available. I'd still be buying. That's what my plan was all proceeds went into fixed income to lock in the money, which is what was working for me, and grow that money passively without much risk. There's still risk in everything, but not as much risk as securities. What else is there? I would say be careful right now. I really don't know if this rally is going to maintain. It could. I've been wrong many times, but normally I'm good at finding bottoms and not tops. That's my history. I'm not very good at finding tops. I'm very good at finding bottoms and riding the way from there. So I am not, as of right now, I'm not buying any securities. I'm just trading option movement, so that I can build up capital for the next dip, which could be happening or might not. And if it's prolonged for a while, then there is nothing, and then I will buy in there where I feel the PE ratios are valid. Other than that, I hope everyone's been doing very well. I'm doing a lot better than I was. And hope everyone has great fortune in the market. If you have any questions, let me know in the comments below. Have a good day.